Hey, what's going on YouTube? It's your boy the Stock Dude back on the prowl again. In this video, I'm gonna show you a scan that I use on a regular basis that's gonna help you find low price stocks between $5 and $10 per share. So in other words, you don't need a whole lot of money. For this one right here, you can break your piggy bank. And let's get started. Alright, and we are back on a prowl again. Alright, I'm gonna take you guys to my favorite, and I do mean favorite, website that goes by the name of finviz.com. Now I'm gonna show you guys a simple stock screen that will enable you to find stocks priced between $5 and $10 per share that are in an uptrend and that have been going up and could possibly go up even higher. But like I always say, I'm not a stock expert, nor do I play one on YouTube. So make sure that you do your own research and your own due diligence before you put your hard-earned money at risk. Now, like I said before, I hope you got your piggy bank near you. If you got your piggy bank near you, get your hammer and break the piggy bank, because the stocks that I'm going to show you, a scan that I'm going to show you, will find stocks that do not, and I say again, do not cost a lot per share. So right now we are on the home page of my favorite, and I do mean favorite, website that goes by the name of finviz.com. This is where the stock screen will be made. And once again, it's a simple stock screen that will enable you to find those low price stocks that are going up and could possibly go even higher. Once you're on the home page, you want to go to this third tab right here on the left hand side at the top. It says Screener. Click your Screener tab. Once you are on the Screener tab, you want to go to this tab right here at the top center. It says All. Click the All tab. Now all that All tab does is just spread out all the parameters that you have to choose from in order to set your screener to find these low price stocks that I was telling you about. Now I know it looks like a lot, but don't let that scare you, because like I said before, the screener that I'm going to show you guys is very simple, and a lot of this stuff you don't need. So don't let that freak you all out all inside. First thing you want to do is set your parameter for your price. And I said I wanted to show you guys how to find cheap stocks between $5 and $10 a share. So guess what we're going to set our price parameter to? You guessed it. Price between $5 and $10 per share. Highlight it. Click on that tab. Next thing you want to do is go to where they say it says 50-day simple moving average. You want to hit your drop down arrow and you want to set your price above SMA 50. Now all that means is every stock will show a price that is trading above its simple moving 50-day average. Next column over, you'll see 200 simple moving average. You want to hit your drop down arrow. You want to do the same thing. Highlight price above, this time SMA 200. Now having those two parameters, SMA above 50 and SMA above 200, all those two parameters do is give you stocks that are in an uptrend, because that classifies them as being in an uptrend because their price is above the 50 and also above the 200 moving day average. Next thing that you want to do, which is very important by the way, average volume. You see this tab that says average volume. Now volume, for those that don't know or those that may not remember, volume is basically just shares that are bought and sold in the same day. average volume, you want to have at least 200K, 200,000 shares on the average that are bought and sold. These are the stocks that we're looking for, because with that 200K, it gives you something else that is very important. It gives you what's known as liquidity. Now, I know liquidity might seem like a real big word. I know some of y'all thinking, come on, stock dude, with the big words, stock dude, with the big words. But liquidity is super important, because basically speaking, liquidity is just how easy is it to get into a stock by buying shares, or get out of a stock by selling shares. That's all liquidity is. The ease of movement, either buying shares and bringing them into your account, or selling shares and moving them away from your account by selling them. Because I'm going to tell you, it's nothing worse in the world than to be invested in a stock that doesn't have good liquidity. And you may be sitting on a profit that you can't even hardly get the sell order to activate. So that's what you don't want, is to be stuck in a stock with a profit that you can't get. So you want good liquidity. So the average volume tab you're going to put at over 200K. And what that's going to do is find you stocks that are trading at least 200,000 shares on the average, or possibly more. But at the minimum, these stocks should have a average volume of 200,000 per day. Now, the last thing you want to do is go to this pattern tab. We got 3 different patterns that we're going to look at that's going to help you find those low price stocks between $5 and $10 a share. The first pattern is the wedge up pattern, right? Wedge up pattern. The second pattern is the triangle ascending pattern. Now, ascending means going up. The third pattern is your channel up pattern. Now, if you're taking notes, I would write them 3 down. I got 3 of them written down to make sure I didn't forget to tell you all 3. The 3 patterns that'll help you find these low price stocks. The first one is the wedge pattern. Second one is the triangle ascending pattern. Third pattern is the channel up pattern. Those are the 3 very important patterns that help you find these low price stocks that you're looking for. Everybody always wants the low price stocks. I don't know what it is about it. Anyway, you want to go down, you hit your drop down arrow, and you're going to start right with the very first pattern that we called out, the wedge up pattern. And basically all we're going to do is go through and eyeball and look at the patterns. Now, I can tell you right away, the first pick and the first one that jumped right off the screen to me is this company by the name of AXT Incorporated. Looks like it's in the semiconductor, technology semiconductor section. AXT Incorporated, look at there, the price is only $7.70 per share. Now, this last candlestick, I have this chart set on daily. So each one of these candlesticks represents 1 day's trading. Now I'm looking at this right here is Friday's candlestick. If you notice, you'll see it has that leg that's going up right at the $8 mark, and it hit what's known as resistance. Now, how do I know it's resistance? Because the price hit that $8 mark and it came down. Now, what that tells me is that it's a very good chance that in the next few days, possibly even tomorrow, that this price will continue to fall. So what I would recommend to you guys is to let it fall and try to buy it when you see a green hammer candle, or even a red hammer candle, and it'll look like this. Here is a red one. You'll see a little stem on the bottom, and once you see that little stem, that stem on the bottom means that that particular day's trading has come down as far as traders are willing to let it go before they buy it back up. Now sometimes they're red, those hammer formations, those hammer candles are sometimes red, but if you can catch a green hammer formation, you're good to go. So once again, it looks like this thing is trying to come down because it hit that $8 resistance mark, and then it immediately started to come down. So I would recommend to you for the next few days, put this on a watch list, keep up with it, let it continue to fall, and then once you see that red handle with the stem on the bottom, or if you're lucky, you'll see a green one. Once you see that, it's good to go to buy because it's going up, and chances are when it breaks through this $8 resistance area, it's going to be upwards of $8 going towards $9 or more per share. Now just to give you an idea of how much that can make you, if you buy this stock right here at $7.50 and you got 1,000 shares and this thing gets to $8, guess what? That's $500 in your pocket, less my consultation fee that you can send me. So long story short, make sure that you wait and let this stock price continue to fall, because this symbol right here lets me know that it's going to come down. I don't know how much and I don't know exactly when, but I do know that it'll come down. So let this price come down and wait for it to go green, hopefully with a green hammer or even a red. But once it does go green, you can jump in with both feet, because when this thing breaks that $8 resistance area, it'll automatically become a support area. That's what prices do. They break up through a resistance area, and the area that they broke up, or the price that they broke up beyond, from that point on, it acts like a support area. So let it close above $8 per share on a green up day, meaning that the price was higher at the close than it was when it opened up. But when it closes on a green day, you got my blessing, man. Go on and jump in and get you some. Now, that right there looks like to be the best opportunity that I can see. Basically, all you're going to do, once again, is just eyeball them. Eyeball the charts. And once you do this for a while, you can eyeball them and you'll know right away what's the best opportunity. Like right here, the one we just looked at, AXTI. That big green influx of volume, see how big that thing is compared to the rest? That right there told me that this was the best opportunity for you to make some money just because of that. And then once we clicked on the chart and looked at the rest of the formation, and we see that, okay, yeah, it's going to come back down towards the $7.50, $7 area. And then that right here, this magenta line, used to be a resistance area. See it come up here and then it immediately goes down. And then once it broke through on this day, it broke through another green day, and it's been going up. So once again, it's going to come down and try to do what they call retrace and retest this area right between $7 and $7.50. Once it turns green and closes above this $8 mark, hey, jump on it with both feet. So that's one for you. AXTI, put that on your watch list. So now we're going to go back to the pattern tab and change it away from wedge up to the other formations that we're going to talk about. The second one, triangle ascending. Now that triangle ascending, I'm looking, the same thing, you're going to eyeball it and see what looks good just from seeing it. Now right here, I can tell you right off the bat, GAB, the Gabelli Equity Trust, that's a closed-end fund. Now we talked about closed-end funds in previous videos. I like closed-end funds because a lot of times they pay you this, a big, juicy dividend This right here is the best of both worlds. You get a 9.93% dividend on a stock that's about to break out. Who does that, man? Stock Dude does that. That's who. Put you in a stock with almost a 10% dividend, and it's about to break out, so you get to make money not one way but two ways. So put this on your watch list. Now, once again, Gabelli Equity Trust Incorporated pays almost a 10% dividend, and the stock price is only $6.04. So put it on your watch list. Stock pick number 2, about to break out. Heavy volume coming in near the end of October. That lets me know that when this stock price gets above this magenta line, probably at $6.10 or more on a close on a green day, this thing is going higher. So grab you some. That's 2. And we're going to go to the last part of our screener and check the pattern that's known as the channel up pattern. Now that channel up pattern, I see another one. Where is it? GoPro, the little cameras and stuff. This right here, GoPro is trading at $7.14 per share. Now if you notice, it's in an upward channel, and as long as this stock price remains within this channel, this is the support on that channel, this cyan line, that's the resistance within this up channel, that magenta line. As long as it remains within this channel, this thing is going higher. Now what this tells me right away, 2 things that I can see that sticks out at me right away. Another big green volume influx that lets me know that hedge funds, millionaires, billionaires, they buying it, because that's a lot of buying pressure. And if you look down here at the bottom, you'll see volume is 4,956,000. That's quite a bit more volume than the average. So you got a big influx of volume, and on the latest, most recent trading day, you got better than average volume. The only thing that I'm waiting for is for this thing to break the $8 mark. Notice right here, you got this upside down candle, and you got that big red candle. Both of them stop at a resistance area right around the $8 mark. So GoPro is a buy from your boy, the Stock Dude. Once it breaks $8, grab you some, cause it's going up. Now for those that haven't done so yet, I ask that you please hit that subscribe button, turn on your notification bell. That way when the next hot video comes out, or when the next screening video comes out, the Stock Dude will notify you and you won't miss a thing. I hope that you enjoyed this video, and y'all come back now. You hear? I'm the Stock Dude. I'll holler. Peace.